potential free money to add an ADU to your backyard. We should give you the latest and greatest from Logan at Housing Wire on the housing market. We'll talk about Goldman Sachs, and I will leave you with 3 questions about real estate investing. I am going to test you. Are you interested or are you obsessed? Folks, let's get into the daily financial news for August 7th and 1st. Let's shout out all of you. We are now 784 subs away from 50,000. Yes, 784. If you can subscribe, join, let's get us over 50,000. That would be amazing. And we can start planning the event in Vegas, but more on that in a minute. Let's talk about this free money to get an ADU built in your backyard. Folks, it looks like California has approved in their budget up to $40,000, yes, 40 grand, to incentivize owners of homes to add ADUs to their backyards. Now, as near as I can tell, the money is allocated, but the rules are not. So who qualifies? Owner-occupied only? Landlords? We don't know. Is it only for single-family homes or multifamily? We don't know. Is there an income threshold? We don't know. Is there certain zip codes? We don't know. So again, a lot of details to come, but clearly $40,000 is and will be motivation to get more ADUs built. We are going to have to wait to see what the rules and who qualifies and all of that. But yes, there are increasing incentives to build more ADUs in the state of California. And it wouldn't surprise me if that trend goes to other areas as well. There's a clear shortage of housing, affordable housing in the country. And to be clear, ADUs are one of those ways to help fix that. So, yeah, I'll do it. I think this is a great move by Gavin. Again, we got to wait for the rules, so I reserve the right to change my opinion. But since I give Gavin so much grief, I need to be transparent and say, you know what? I think this is a pretty good idea. So there, I did it. Now I got to go wash my mouth out with soap, but I'll be okay. Let's talk about the housing market. We get weekly updates from Logan at Housing Wire. He's a great follow on Twitter. It looks like active inventory is going up at a pretty slow pace. These are weekly numbers. I'm going to round to the nearest 100. Active listings went up 2,900, exactly 2,939. Here's the question, and we will see this when the days on market numbers are posted. It is my current impression that new listings are still way down year on year. So in order for the market to have rising inventory, we have to have less demand. This is what I think is going on. We are seeing the broken housing market lock up. When rates exceed 7, that is a number that pulls back demand. When rates go sub 7, the marginal buyers come back and we move forward. We have been above 7 for several weeks now, I think. So again, higher for longer with a Fed raise in September. All of these things are going on, and we are heading into the slow season. So again, I am going to be watching days on market. Days on market are the thing. I think days on market will double and maybe triple as we get to the end of the year. This is, we'll get more on this later because I want to talk about this more detail, but days on market is the number I'm using, and days on market is what I am using to write my disrespectful offers. Me, my market, my buy box, 30 days or longer is where I am, testing the waters. So let's talk about Goldman Sachs. Shout out Lance Lambert from Fortune, a great follow on Twitter and somebody who writes seemingly every day about housing, housing, housing. So great person to follow. He shared that Goldman Sachs has just released a multi-year forecast for housing. Usually these housing forecasters do a one-year call. So when somebody puts out a multi-year call, that gets my attention. So first to note, Goldman Sachs is using Case-Shiller. So they're basically saying, what will Case-Shiller do in 23, 24, 25, and yes, no, just 25. 23, 24, and 25. There it says through 2026, but I don't have that number. So anyways, in 2023, this year, Goldman Sachs says Case-Shiller will be up 1.3% for the year. That's interesting because if you know and you're in the weeds, Case-Shiller right now, I think, has us up 2%. So what Goldman Sachs is saying is, hey, the market will come in a little bit, which again, what I called January 2nd, a flat year. 2024, Goldman says it gets slightly better. They're calling for 1.7% in 2024. In 2025, they are calling 2.4%, and there's the number for 26. In 2026, going at to 3.8%. Roughly speaking, this is a painful, slow grind sideways. This is unfortunately what I brought you a year ago. It is not fun. Nobody is happy. Nobody. Owners, buyers, agents, nobody's happy with a sideways market. But folks, we had 19% appreciation in 1 year. We've got to pay that back. How do you pay that back? How do you get to on trend? You go sideways for multiple years. So Goldman Sachs, congratulations. I'm happy you're watching my channel. I agree with you. The data supports that call. And just so you know, if you want to baseline something, if you go back to 1976, the yearly average for home price appreciation is 5.5%. Last point of clarification, these are all nominal, not real, not adjusted for inflation. So again, those are Goldman Sachs, pretty much bringing in line with what One Rental at a Time has been calling for quite a while. We may have an end of an era. I don't know if you saw this, but I certainly caught my attention. Zoom, yes, that Zoom has told their employees, get your butt back to the office. I don't know about you, but that caught me by surprise. Yes, even Zoom is saying, get back to the office. Folks, what we are likely seeing, at least in technology and software companies, is you're likely seeing release cycles slow down. You're seeing bug fixes slow down. You are seeing just this whole engine slow down. I have worked in software for 20 years, the last 15 years or so in the weeds of product development, product marketing, launching new products. If the team's not in the same room, you're not getting the same speed and energy. Yes, I know about Slack and all, it's not the same. It's just not the same. So could Zoom mandating get back to the office be a sign that, work from home is on its last legs? Maybe. We shall see. So 3 questions. A lot of you come to the channel because you're interested in real estate investing, and I appreciate you. I want to highlight 3 questions. Again, I love the idea, are you interested? Are you obsessed? A lot of you are full-time employees like I was. A lot of you have a family like I did. It's tough. You have no time. You have to become obsessed. I think there are 3 questions I could ask you, and you could answer truthfully to yourself, or if you want, leave comments below. Here they are. I want to make sure I get them. Here we go. What is your buy box? Can you clearly articulate it? If you can't, you're interested. It's a hobby. It's a game. If you can articulate your buy box, awesome. That's the first question. If you don't know what a buy box is, congratulations. I got a $47 deep dive buy box you can buy, watch, get all the value. See student buy boxes. It's right there for you. But that's the first question. Number 2, how many days in a row, be honest, how many days in a row have you looked at your buy box? Be honest. I know it's summer. I know you got all these vacation plans. I know. How many days have you looked in a row? And then third, and the final question for you, how many new people did you meet in your area, right? Other investors, agents, brokers, contractors, whatever it is. How many new people did you meet last week? Those 3 questions will tell me if you are obsessed, if you're moving forward, or if you are just interested. Think about it. If you want to get on this journey, there's a course $3.99 below, how to get started one rental at a time. Buy it. I'll give you two free $50 courses, maybe the buy box, maybe the mastermind, whatever you want. But also join the Facebook group. The Facebook group is free. To be in a room, virtual, with thousands of other people doing the work, speaking the same language, priceless. Priceless. Get around these type of people. They are doing the work. All right, I want to talk about Leah, Jason, and Dan. These 3 individuals were my interviews yesterday, and I think you need to pay attention. First, Leah. On Twitter, she goes by Leah the Trader. In yesterday's video, we found out who Leah is. Today's video at 9 a.m. is must watch. She gave you 8 psychological traits to become a better investor. That is her background if you watched her first video. Leah the Trader on Twitter. Trust me, you will want to follow her. But again, that video that goes live at 9 a.m. must watch. What we went through in stocks, which is her thing, I tried to translate to housing, investing. It was a wonderful conversation that should not be missed. Jason Pritchard. Our discussion that went live yesterday at 3 p.m. is a must watch. We gave you a warning and opportunity. I fear that we are going to somewhat repeat last year. What does that mean? That means if you are a flipper, if you are some kind of people that, a burr, and you need to get in and out of a deal, the farther we get into the year, the slower the market will get. There were a lot of people, and I brought them to you on this channel, that lost 100 grand, 150 grand, 200 grand because they were not tight to their buy box. So again, we gave warnings to people that are in the business of turning homes. We also tried to tell you, get ready. The opportunities are coming. When rates go up, buyers disappear. When rates go up, days on market expand. When rates go up, the opportunity to get a yes answer go up. Get excited. I proved it last year and will try to prove it again this year. When the market slows down, people that follow one rental at a time get busy. We get aggressive. We are writing good and great offers. We are getting deals done because everybody thinks it's impossible. Folks, those idiots on the sidelines that listen to the crash bros and doomers, they are not your competition. They are noise to be ignored. Do the work. Write the offers. Only great deals, negotiate to good if you would like. As the market moves on, you will see opportunities. To that point, we have 2 golden tickets going out. 2 golden tickets going out. I want to congratulate Jay and Sam for getting your first deal, and Seth and Tammy, congratulations for getting your first deal. Seth and Tammy told me in their story they had been hunting for this particular house for over a year. Folks, it's our time. It's our time. Do the work. Write the offers. Follow up. Follow up. Put all of it in your spreadsheet. Track the dates. Do all the things that we talk about in this channel, and your chances will go up. Last point on this. If you don't write the offer, I guarantee you don't get the deal. think about that. So that was a discussion with Jason. And then finally, the one and only Dan Bird is back. We gave you 2 videos yesterday. Video number 1 at 5 o'clock, we caught up on the last 2 weeks, what happened in the market, what happened with the downgrade, what some stocks. And then on the second video that went live at 7, we talked about the upcoming week. We talked about CPI. We talked about CPI potentially spiking to 3.3 or 3.4. Is the market ready for it? We talked about a lot of good stuff. And then he talked about 2 stocks and their reaction. From memory, I believe it was DraftKings and Fortinet are 2 of the stocks that we looked at. So again, all there for you. And yes, if you did not watch Dan Bird's 3-hour live session, you can buy it. Lots of people are buying it this morning. It's $47. Become a better trader. See what he sees. Again, for $47, I don't know why all of you aren't picking that up, but you can find it on my website, onerentalatatime.com. And then finally, it is clear to me that we will eventually eclipse 50,000. I need to start planning this event. And the first question I have is how many people will come? Las Vegas will be a trip for most of you, right? That means probably a plane flight, probably a hotel room. So I'm trying to figure out how many One Rental at a Time fans will come. So if you're watching this live, do me a favor, just wait. Once I stop the live, I would love you to leave a comment. Will you come? Because right now I'm going, hey, do I find a room that will have 100 people? Do I need a room that's 200 people? Like, how big of a room do I need to secure so we can start putting this together? So that is my first question. How many people will come? Now, some of you are saying, I can't tell you that until you tell me the dates. I am thinking right now, because again, we haven't hit it yet, I'm thinking late January, early February. That's kind of what I'm thinking. Or late January, early February, assuming we hit this in the next 3 or 4 weeks. That's what I'm thinking. I want to make sure I get the room. I want to make sure I give you enough time. I think that makes sense. So again, who's coming? If you're watching live, I would love you to post it once this video goes out. And then lastly, if you could check out my new channel, The Daily Financial News, I would appreciate it. We are trying to get to 1,000 subs. I think we just went over 500. So that would be great. And then, of course, we need to get to 4,000 watch hours, which I just need to produce more content. So again, folks, thank you for being part of One Rental at a Time. You're amazing. 784 to go. And one more time, let's congratulate Jay and Sam and Seth and Tammy. Take care, everyone. Bye.